Hey traders, just want to talk to you about the dollar index on the daily time frame. We do have a sell opportunity here, so before we begin, don't forget to subscribe and hit that bell button. Let's kick off with the close on Friday. As you can see here, we had a bearish pin bar. Thursday, my apologies. It was a bearish pin bar reversal on Thursday. It rejected this trend line resistance here, and as you can see with the dollar index, which is essentially a basket across different currency pairs of the US dollar, we can see that we have not only rejected the trend line resistance here, we actually do have a rejection of a major fib level as well. The 0.618, there we go. And like with horizontal levels and trend lines, Fibonacci levels do represent barriers obstructing price from going up or down depending on whether we're going long or short. Looking at this, if we zoom in again, we can see that thanks to Thursday's bearish pin bar reversal, we do potentially have an entry point within this ascending wedge formation. If we look at the RSI setting 6, we can see that we do have bearish reversal divergence where we have a lower high, yet price has made a higher high. This is where we get a slight disagreement between price making a higher high, as we've seen from the end of April to the more recent kind of end of May. Yet the RSI setting 6 has made a lower high. This says that the bears are creeping into the market. Okay, we've got a couple of other clues in our favour as well, including seasonality. Historically, June and July are pretty bearish for the US dollar compared to other months, and typically if we do look at seasonality in closer detail, there are various currency pairs and commodities that do better at various times of year and worse at other times of year. Let's take gold for example. From mid-December through to January, typically it does very well, as do equities. For example, the Santa Claus rally historically does very well around Christmas time, preceding Christmas especially. Christmas 2018, of course, was the first year ever since I can care to remember where we didn't have such a privilege of stocks going up. In fact, they went down, but that was the exception to the rule. So how are we going to trade this one? Well, we're simply going to trade this one as a bearish pin bar reversal, rejecting this trend line resistance. We also have the completion of an A, B, C, D pattern here. So if we look at B to C, the B to C leg, we can see that we do have a rejection of the 1.272 based on the fact that we have the A, B, C, D. And typically when we get a completion point of that free wave harmonic formation, point D at the 1.272, and we've got the overlapping of, say, a Fibonacci level and a horizontal level, or indeed a trend line, then that gives us extra incentive or extra argument for our sell. But in this case, we've also got bearish reversal divergence and seasonality. Well, hey. So in terms of trading this one, what we're going to do is we're going to place a limit order at the break of Thursday's low, stop loss above Thursday's high. And if, as and when we're triggered into the trade, then we will scale out at a 1-to-1. So say, for example, price goes down in our favor by the equivalent number of pips we've got risked. Say, for example, if our entry is on Thursday's low, stop loss above Thursday's high, and price does go in our favor, then what we're going to do is buy back half the position if, as and when price does get down to here. If we do see the breakout of this level here, bearing in mind it's not a very strong level, however, what would be interesting is if we do get price exceeding this low here. If it exceeds this low, which kind of just aligns below our first profit target, then we can reasonably expect price to go down a little bit further. And if it does break this trendline support, then we can expect it to potentially go down to the next significant low. It could be this low, understandably, here. Or indeed, it could be this one right here. So what we're going to simply do is anticipate price rejecting this trendline support. If it does, we can see a bit of a retracement against us. However, ultimately, if it does break, then we can reasonably expect that a few previous swing lows are breached like this one, and maybe these ones here. And in the great scheme of things, we're not really asking for much if we look at the US dollar on a slightly longer term time frame. Okay, so if it does not go in our favour, then certainly we're going to give it 2 more days to actually trigger us into the trade and make some movement. If it doesn't happen after 4 days, then we're going to kill the trade. And of course, if we get a bullish pin bar reversal within inside 4 days, and we're going to move our stop loss if we're triggered into the trade above the high of the bullish pin bar reversal. And if we're not triggered into the trade, then absolutely fine. That's no problem. However, one thing I want to draw to your attention is certainly if we go to the weekly time frame, we do still have a potential entry looking at the weekly. Last week closed as a bearish pin bar reversal as well. However, the reason why I was talking about a limit order on the daily time frame is it gives us a much better reward to risk in terms of our entry. I mean, our entry will be slightly up here, we'll get better value in terms of a better price. However, if you did want to essentially have a far safer entry, i.e. the break of last week's low with our stop loss above last week's high, then of course you will have safety in exchange for reward to risk. So if we are targeting, say for example, the previous swing low, which occurred on the daily time frame, then it's merely it's inverse reward to risk, quite frankly. However, if we're looking at the weekly time frame, we're looking at it slightly differently. So the most recent swing low on the weekly time frame would be this point here. So if you drag it down to this point here, then fantastic, that's a 2.5 to 1 reward to risk trade. However, I would see that there could potentially be a bit of support in the way of this trendline support. There we go. Okay, so where there's risk, there's reward. We're placing our order based on the daily. Certainly, if it does trigger and it does go in our direction, then we'll have even better reward to risk if it does play on the weekly as well. If you do decide to take the weekly, then please be advised that you've got safety, but the cost for taking on that safety is profit potential. Okay, the old adage, where there's risk, there's reward. Anyway, that's it for now, folks. Happy trading.